Michael Holland joins us now from Holland and Company, looking at the idea of careful securities analysis, listening to managements, and moving forward with a more calm and stable approach than the trading. Michael Holland, let's start with the meme trading now. When does this go away, or are we going to live with meme trading forever?
Likely not forever, Tom. By the way, good to see the three of you. The reality is that all of these things do go away, but you just don't know how long they take to go away. So I wouldn't be real fast to get out of your cash position and start shorting the stocks right now.
So, Michael, you just are saying music to Tom's ears. Why do you think that people ought to be holding some cash right now, given the fact that there's extreme accommodation from central banks and ongoing fiscal spending?
Lisa, the history that Tom talks about, the decades I've been on, what happens is when you get to this point where the complacency is actually pretty well earned because the Federal Reserve right now is doing what it's doing. You listen to Carl Weinberg in his testimony in the last couple of days. I think you have very smart people saying things can be pretty good for an extended period of time because of the Fed. Having said that, Tom said earlier in the show, 39% increase over the last 12 months, meme trading stocks, SPACs, et cetera, all the stuff that the bears talk about. Both camps have very smart people in them. Either or both could be right for some period of time. Having said that, I really like an all-weather portfolio so that when things go in the direction no one expects, you're saying, I'm still okay. I'd like to be a survivor in these markets.
All right. Well, let's talk about that survival here. I am curious, Michael, why would anyone buy into the case here that the Fed can sort of orchestrate this proverbial soft landing?
I don't think you buy in, remain 100%. That's exactly the right question. In fact, the soft landing may not happen, and it may happen. I think I'm probably in the school. It probably could be a little messy, but I have no reason to think my prediction would be any good or as good as the three of yours or Carl Weinberg's or anyone else's. So nobody knows the answer to that. Will it be a soft landing? Having said that, it might be, which means that to have 100% triple levered is probably not the preferred position in the stock market. On the other hand, having some cash in case it's wrong, you'll feel better at the end of the day because you will survive.
Michael Holland, when you look at the accounting statements of these companies, it speaks of fundamental analysis. Does fundamental analysis have a value here? Securities analysis have a value here when you see the ratios we're living with?
Absolutely, Tom, because when you get to a time like this, if you are going to inch back into the equity market sometime in the next decade, what you want to have is managements who have financial statements that tell you, as in the case of JP Morgan, for example, you referred to them earlier in the show, they show you why they have fortress-like balance sheets, what the prospects are for their trading revenues, having been so great in the past. There's a gold mine of information in those financial statements, and that's part of why I've been able to survive myself by paying attention to things just like that. Those are kind of immutable things. Facts are stubborn things, as it's been said.
Michael, there's a spectrum of risk and return, and the idea here of there are times to go hard into risk for that return, and then there are times to accept very little return for not being very risky. I don't need to tell you this, but where are you right now on that spectrum?
A perfect question, Lisa, because centuries ago, a very successful investor named Rothschild said, buy when there's blood in the streets. We're certainly not seeing blood in the streets right now. We're seeing the opposite. We're seeing a Federal Reserve which has given a pass to anyone who wants to see assets of any kind go up. So it's time to have some cash, as you said before. So on the risk spectrum, I'm saying you're tilting over the middle to the area where you have to show some caution lights. For sure.
Yeah. Yeah, but I mean, showing caution, let's say you don't want to necessarily go into cash or move a large allocation into cash here. You want to stay invested in the market and hopefully take part in whatever upside might actually be left here. Is there safety to be found in that thinking?
Yeah, Romain. I think Tom's question earlier about fundamental analysis is related to the answer to your question. Oracle is going to report after the close tonight. I saw the stock there a few months ago trading at quite low multiple. The prospects for the company, a management that has shown itself over the years to get it right. And my guess is what they're doing, they have a report tonight, maybe there'll be a lousy report and it'll go straight down. But I think there are companies, JP Morgan will be in that category, General Motors with Mary Barra. I think that there are places in the market where you can find opportunities, but you have to work at it.